The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday. Tiger Technicians Hour, 11 o'clock till noon Eastern Time, 877-927-6648. And love to get a call from you. Wait a minute. This is, of course, Thursday the 31st. I believe that, if I'm not mistaken, we should be seeing the end of the month at 4 o'clock. The bars will be completed, and we'll be able to do an assessment of what a great month March was and what to expect in April. Last night's webinar, we went through a whole bunch of things. I discussed the different chart patterns. I discussed also what I'm looking for. But I wanted to really define it by being as faithful to what I said earlier on. I want to see where we close in all the different, the key stock indices, the key stocks, the commodities, really important. And the day's young. It's only 1.5 hours into the trading day. Anything can happen. I also want to see whether or not the VIX is going to be important or not. So, thank you to our hosts earlier on. This is a tremendous resource for all of you out there. You start off with John Logan, just gives a fabulous overview using his TAS market profiles. Then comes along Larry Pesavento, looks at the stuff that many of you, just because of Larry, we've all started looking much, much more at commodities, etc. Great program, does terrific work. Then along comes Tom O'Brien. Today it was just Tom without Tommy. That was a tremendous show. I mean, just covering a wealth of data. I try to do the best I can right here. The Dow's up 29 at 17,746. S&P's up 246 at 2,066. The comp index is up 13 at 4,833. The GLD is up 89 cents at 117.99. This is going to be quite an important moment for the GLD, and we'll discuss that as I move along. Gold is up 7 at 1235. Silver is, silver is up 17 cents at 15.39. The bonds are up 30 seconds at 164. We need to go through that, and the dollar is broken. Sarah keeps asking about the dollar. What happened? Will it break the left side low bar? And I said it's going to test it. Will it broke it? There's a very important conflagration going on between the currencies, the dollar in particular, and what the impact of the dollar pulling back means to all the other commodities. And we need to think about the agriculturals as well. So the TLT is up 61 cents at 130.31. And crude oil, if I can just find it over here. What happened to my crude oil? Oh, is that what I got rid of? That was a mistake. So I'm going to have to get rid of the... Well, I'll just have to type it in here. HCL, the continuous contract crude oil, is up 21 cents at 38.55 in leg A, B, C, D. To the downside, this is going to be very important. So you've got an A right there. You've got a lowercase b right there. Next trough is there. And the next trough is not yet formed, but we're in the leg down. Lowercase d. Lowercase is on the downside. Uppercase is on the rising side with the peaks. And now, let's go. A bunch of questions. Let me just do this because I want to get it out of the way, and then I want to get to the questions, some questions that were asked last night I didn't get to. In my webinar, I say that some of the things that we'll look at are more towards the to my show, the Tiger Technicians Hour. So let's not waste time. There was so much else to do. But I really covered a tremendous amount. Now, the dollar has broken the left side low in the continuous contract. So it's in leg D down in the weekly chart. The technicals are still very poor. The monthly chart, this is a 120-minute chart. The 120-minute chart is very important, but I'll come back to that in a moment. Let's first go to the daily. The daily had a low back on the 18th of March at 94.58. It ran up to 96, I think, 96.40, and then came back down and held by 1 penny. 94.59 was the low on the 30th. And then yesterday, that was yesterday. And then today, it took it out. Now, my rule of thumb with the arch formation, and in the Chapman wave methodology right here, let me just do that. I was ready for it. I didn't know that this would be the question. Let me look at the arch formation, chapter 13. In chapter 13, we look at the arch, and that arch formation is very important because why? It shows you that in the larger context, not in the lowercase h, but in the larger context, sometimes you can make a plumb line and look to the number of bars from the left side. This is the IBB. It's actually the BBHs, the S&P biotech holders, way back when it was in the 130s. It was a long time ago. This is in 2004. And it had the same number of bars to the upside, to the downside. And I always talk about this, that in a crash, you take out the left side bars. It's like one bar just wipes out 6, 7, 8 bars on the left side. And that could be a 1-minute chart, or it could be a monthly chart, or a yearly chart. That's crash material. But normally you will get the same type of action to the upside as you get to the downside. So forget about the rule that says when you come down, you come down. There's an elevator up and a parachute down, whatever the expression is. No, most of the time you come down in the same amount of time. There might even be the last 2 bars, like in the BBHs, are crash material because they just plunge. But the number of bars is often very much the same with your plumb line. Look at this, left side equals the right side. I want you to just get that out the way. In a crash mode, it's different altogether. You not only take it out, but there are consecutive down moves, hour and day and week after week. It just keeps going down. That's very different. Now, here's the other thing. When we are looking at this kind of pattern, as I say, there could be the left side, right side arch formation. There are 3 rules that I talk about. And this is from my CD introducing the Chapman wave methodology. And that's still available at TFNN right there, introducing the Chapman wave methodology by Basil Chapman, chart analysis in the stock market. I should remember after all these years, 27 chapters, and there are questions and answers and little tests that are given. So really a very informative CD book. And here we go. So now what you've done, you've gone 1, 2, 3, 4, 5 bars up, and 1, 2, 3, and the 3rd bar down is taken out the left side. That's showing power to the downside, number 1. Number 2, you still have to look at the larger picture, and the larger picture says, in this particular formation, when you make a cup and you pull back more than 1/3 of the way, there's a real good chance you're going to test the low of that cup formation, and that would be at 92.62. But let's just leave that for the moment, because the monthly chart is also, we've got the end of the day, and this monthly chart so far is suggesting very strongly that we will make a rectangle high-level consolidation with a chance of taking out the left side low. So to answer Sarah's question is, this is the most important bar because we've taken out the left side low. If there is a close above 94.58, it's at 94.38 right now. That means what? I'll talk about that when we get back. I don't want to rush. There's no rush. And we've got Bill in Boston.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Dow's up 23, S&P's up 2. We're going to go to Bill in Boston. Bill, how are you?
Yeah, hi, Basil.
Hi.
So I'd like you to have a look at Salesforce. It's gone straight up right after earnings from around 60 to almost 74 today. And I'm wondering what your insight would be on this one.
So let me ask you two questions. The first question is, do you have a position? That's number one. And the second thing, is this a stock that you've watched a lot and it's one that you wanted to get in and then it just got away from you, or is it just something you use as an observation?
No, actually, I bought a position right before earnings at 61. And I'm still holding on to it.
you see that makes it very different from me. If you had asked me, and you had asked me right now, would I be buying CRM, Salesforce.com, cloud company, trading at 74.03, down 27 cents after yesterday? As you said, I didn't realize earnings were out yesterday, but yesterday, that guy is really a master of information. I can't remember what his name is. I should know it. I can picture him right now. But he's like in Athena Healthcare. That is Bush is the name of the guy, and he is able to come on set and just talk his stock up. It's an amazing thing, and it had done extremely well. CRM is the same thing, Salesforce.com. Now, what I'm going to say to you is two things. The reason why I asked you is it is right. It's a little bit more than halfway, but let's call it, for argument's sake, Mark Benioff. Thank you very much. The Den is a marvelous medium. Jan, the Den, just quickly texted me that. The high that was made, its all-time high was 82.90. This is not the all-time high in the sense of price because it's split a couple of times. So it's I'd probably be able to find it here. I'd probably find a letter sitting somewhere up. No, I can't. Somewhere sitting up there, but I remember it was at least in the high triple digits. Now, what's really important about this is that it's broken. It's just now breaking its weekly downtrend resistance line. So to me, I treat resistance lines like that as just a piece of information, because at some point, even if you went sideways, you would break a trend line. That is a declining trend line, not necessarily a rising, but a declining. So that's number one. Number two is the candle that was formed last month where it went down to 52.60, and you got it pretty close to that low area, makes it really important, because I've got a peak E with a down arrow in the monthly chart, and that says to me there's a good chance that Salesforce is making some kind of a top that has to be watched real closely, because coming back as strong as it has implies that the move down was more peripheral to the structure of the company than you would normally see, because this usually, the move down from 80, what did I say, it was 82, let's call it 83 because almost there, down to the low of, what did I say there, 52, that is a monster move. That's, what is that? That's, so we're talking about a 30-point move and an $80 stock, and you're talking about a 40-something% decline, and now it's come back, and it's come back 50%. So I'm going to say to you, bravo on your entry point. If you ask me, would I buy it right now, I'd say it's right at the inflection point where I would have to make a decision based on the weekly and the monthly chart, both of which are technically not that great. It has been walking the 9-period moving average, but it's not that great. But because you're in at this particular level and responded very positively yesterday, today's going to be really important, because if it actually, by the end of the day, if it slips under 72.81, that's going to say short term, it has a problem. It's going to test a 200-period moving average of 71 and could probably go to 68. But that would be the 71 areas, the 9-period moving average, that would start to say, uh-oh, has it run out of steam? So here's what I'm going to suggest to you. I don't know how much you bought, but what I'm going to say is, if you have enough to divide your position so that you can treat your entry in the low 60s as a core entry that you would like very much, if the stock allows you to hold it longer, more intermediate term, right through April into May, which is really dependent on whether it's going to hold the 70 to 68 area, then I'm going to say divide it in half, have a trading stop on some, because a 10-point gain on 62 entry is really very good. So I'm going to suggest that some part, it doesn't even have to be half. You could make a 2/3 call, 1/3 you take off, or 1/3 core you're going to hold, and 2/3 you're going to split into two levels. But I am suggesting here at 73.86, one part, even if it's just to reward yourself in money management terms, a 10% gain on a 10-point gain on a 60, that's 12-13%. I'm going to say to you, raise your stop on some of it so that you've got that cash in hand and you can say, great, that's my reward. The second, if you're treating it in thirds, the second third, I'd say I'd have a stop in the 72.20 area. Why? Because if it breaks under 72, there's a real good chance you're going to be able to buy it back maybe 2 points lower if you want, but it gives you that opportunity. And if it's going to move the way it had the response to the earnings, my recommendation to you is to say, treat it with respect. If it breaks 74.66 today or tomorrow, and it had a round number open yesterday, 73 to me is absolutely critical. If it closes above 73, that is a positive. But if it closes above 74.66, that is really good action, at least going into next week. And that allows you to still stay in that position with that 1/3 that we're treating as your initial takeoff thing. You could have an 80-cent stop on that 1/3. So if it goes today to, let's say it goes to 73.20, I'd say, you know what, I'm going to take at least a third off, and just it's a reward. The rest you're keeping as your core. You can even, as I say, split that into another portion as well. You want to see by the end of the day, or at least by tomorrow, try to tackle and break above 74.66, preferably holding. And I'll tell you why that's important. Because if it does that, it says it has the strength to finally tackle that very ugly bar of the first week of January opens at 77.14, goes a little higher to 77.97, and bam, goes down to the low 72 area. That is your benchmark on the left. That's really the bar that you want to look at. That's at least as far as I'm concerned. Now, I am very impressed when I picked it up, and I done some work on it just the other day. When I looked at it, it had a high volume low. And that very high volume low very often says you can go to the upside without retesting the low, which of course is way down, for 28 days. 28 bars. That's 28 weeks. I'm not sure if that's going to work in this particular case, but boy, that would be fantastic. So, So that's what I'm looking at. In the Fletcher and the Den just said IBM acquires Salesforce partner Blue Wolf. Okay, so this is also very important. So at least you got a little nibbling around this. People are becoming interested. That's been going on for years. People have spoken about Salesforce as a takeover candidate. But I like the action. Congratulations on your entry. And I'm only going to say to you, I don't know what technique you used, but I think that is great technique and great guts. You stuck with it. I don't want to change your thinking in any way other than to say, if you're asking my advice, just for money management terms, it's a little bit above the 200 period moving average on the 9. Think about taking a little bit off. You can always put it back on. I hope that helps you, Bill.
All right, it did very much. Thank you very much.
Thank you very much for calling. I appreciate it. So that's Bill in Boston. Dow's up 13, and I think we're starting to make some tough decisions here coming into the end of the month and the beginning. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I just want to continue this CRM, Salesforce.com trading at 73.83. I've got a left side, right side price time match. I just want to emphasize that there's a high of 75.71 that was made on the 13th of January. That's really the focal point on a left side, right side price time match, which takes us to April so early next week. By next week, the 6th of April, there should be a test of that level, and that's going to be, you see, it hasn't made the V-shaped recovery. It's started to arch around, and that says it's losing upside momentum. So I think that I'm very comfortable with the recommendation I gave to Bill, and I think it's in a process now that it's going to probably be digesting between the 75s, it's the 73s right now, between the 75s and probably the 71s, maybe even the 68 level if the market pulls back early next week. So that's what I want to mention. Going back to the dollar, I just want to finish this off. Last night, we were looking at so many different things. I only showed the dollar. I didn't really discuss it in great detail because I wanted to leave it for today. I said that some of the things I'll be following up today. Now, this is very important. The dollar, the rule of the Chapman wave methodology is in the H pattern, the bar that takes out the left side low has to, first of all, it's preferable not to take it out like yesterday being 1 penny above and then having a rally. Says you can rally all the way past the next upside resistance, in this case 9 EMA of 95.37, and go all the way to the previous peak, and that would take you back to the 96.40 level. But if you take out that low, it means that you can only now look at the next level of resistance. It might be a peak, it could be the moving average. In this case, it's the 9 EMA of 95.37, number one. Number two is, if it closes below 94.58, you have only one more day by tomorrow to close above it. And if it does close above it, you have to watch the technicals, because if the technicals remain negative, this is just going further to the downside. If you get a turnaround, and the only way you can do this is you have to get a buy signal confirmed in the technicals, because if you do that, that could be the start of a big move to the upside, because there's an H pattern that can turn into a cup pattern, but not when it's gone this far down. I just don't see that happening right now. So now I have to say, okay, what is that doing to gold? And in the gold contract, you're up 8 at 12.37. I mentioned this yesterday, and one of the reasons why we wanted to nibble in my newsletter, we wanted to nibble in the area of the golds. And in fact, yesterday we went into an ETF that has a whole mix of the different very favorable commodities that I'm seeing right now. One of the reasons why we went back in, we were in at a much lower price. We got stopped out for a little bit of a gain. We went right back in at that same price. I'm thinking that this is more an intermediate term buy. I don't know if I will have the patience. I hope I have the patience to sit back if there is a pullback in gold and some of the other commodities at any point, because I think the move that we've had now says two things. One is you might not get much of a pullback, not if the Fed is talking about wanting inflation. Imagine the Fed saying, we want inflation. We're looking, we've got our binoculars out, but they look like we've got the binoculars the wrong way around because we can't even find inflation. So we're going to try to bump things up, and that's why we've got to look real closely at what happens to the bonds. Well, the 30-year bond sometimes is a little bit independent, but the shorter term, we're going to have to keep watching those real closely. So now you've got the arch formation, the consolidation pattern in the GC, the gold contract. You've got a peak D with a very modest pullback, considering you've gone from under 1,050 to the 1289 level. And now you're down in the 1220, having tested 1219, was it? Oh, sorry, 1207. So what we're looking at here is that this is going to be very important. How does gold consolidate? How does the US? Oh, I had a question about that as well. I didn't finish. I'm sorry, on the dollar. Yeah, I tend to do that. There was the third thing I had to. Oh, I did mention it, but I want to re-emphasize. If the dollar on the second day closes below, especially well below the low of 94.58, the low of the 18th, that's suggesting that rallies will fail and that you'll continue making lower highs and lower lows. Just wanted to get that out the way. Now, with the dollar pulling back like this, you would expect that gold, if you're looking at the chart pattern, gold should really be at the 1255, 1263 level. So now we've got to say, hey, wait a minute, are we moving from gold to silver so that, yes, the commodities are still acting well, but one is having a rest and one is playing catch up? Well, I'm looking at this. Remember, we had the questions the last couple of days, and my question was, you could start a little position in something like the SLV when Luke called the other day. The best thing I said was for a bit of a pullback to test the 1440, I think I said, level, and we went down to 1438. So that says, yeah, this is the place to maybe start, because silver very often lags, and then it plays catch up, and sometimes it plays catch up really quickly, and sometimes it plays catch up by just moving a little bit with the previous trend of gold, but really not doing much at all because it gets stuck. It's just been a horrible thing. You see, gold, I think, has the sexiness, it has the pizzazz of being a usable commodity, much more maybe than silver. Well, silver used to have a lot, maybe less now, but gold also has the capacity, especially all around the world except in the United States, because in the United States, people have not had to walk around with little gold nuggets in their shoes to try to use it as payment because things are so bad. Hopefully, we'll never have to do that. But in many countries around the world, that's exactly what you've had to do. And it's a currency of fear, you see. So there's this currency of fear, and you see that the XLF, the financials, are not really doing very much. And this gets to a question here about, what was it? Bob asked me, JP Morgan and DB, Deutsche Bank, I believe. Yep, Deutsche Bank. Okay, JP Morgan, Deutsche Bank, and GFL. GFL? I've never, what's that? Can you tell us the wave count? FT and Article Investment Banks, IPO market is suffering. Big and trading volumes are horrible, like CS said. All right, well, let me try to interpret that. A lot of code there. So the XLF has had a nice move, but it's really kind of a pathetic move as far as leadership is concerned. This is really not a leadership area. Goldman Sachs is just in this trading band. Look at the weekly. It looks horrible. Look at the monthly. I mean, Goldman Sachs, the leader, the former leader, now the laggard. So I really don't see anything. JP Morgan, I was looking at the chart the other day. It acted a little bit better, but only a little bit better. I still think it looks pathetic. Bank of America, actually, it's funny because Bank of America has a slightly better chart formation, even though it's one of the lesser banks. So I don't know. And Deutsche Bank, DBR, I'm opening my eyes. Let's see. Oh, man, that's just terrible. Deutsche Bank is going to test. I would not be surprised if this is the dreaded H, Chapman wave methodology, dreaded H. Remember, what is the dreaded H? Chapter 17. Chapter 17, you think after 10 years, I know exactly which the chapters there are. Chapter 17, the dreaded H pattern, that's the dollar that we just spoke about. You remember this pattern, you come down, you make a lowercase h, you break the left side low, you continue down. You make an H pattern, you test it, you break it, you continue down. And then maybe later on you can make a soft M formation, and then M formation can go on. That's the IBB. This is the pattern that we're looking at. So be careful. Deutsche Bank, I wouldn't be touching this, not even as a spec. It looks to me like it's going down deeper. And, we haven't even got our claws into Volkswagen yet, and I bet Deutsche Bank has a huge chunk of that. So the question is, what about Boeing? Boeing made a peak F-top. I think Boeing has a problem here. So we'll talk about that as soon as I get back. Basil Chapman, Tiger Technicians Hour. Dow is down. No, Dow's up 10. S&P's up 1. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I had just a bunch of questions. I have to do a couple of things right now. Yes, the IYT, is this a consolidation? Well, look, the IYT, the transportation index, just slapped right bang into that Chapman wave down track, inside track, resistance right there. So I tell you, this is a very important period. That's why I said the end of March is going to be very significant, because what happens that first week of April, upside or downside, there are levels that we can look at, and I'm already preparing for that because I have a suspicion, at least a suspicion. I think I'm looking at something that's very interesting, and it's going to be 2 moves that are going to be a surprise. So here, okay. So I'm looking at this peak F in the IYT. All I can say is that it's stalling right here. NSCs, the question was, NSC, this is Norfolk Southern. I haven't notated this for a long time. A, B, C, D, E. It's either an E or an F in the monthly. It's gone all the way from the 118s down to the 65s, and it's trading right now at 83. It's also bumping into the 200 period moving average. No real sign yet of weakness in the daily, but the weekly is the one that is absolutely imperative. If next week it's at 83, if it closes under 79, that's one thing. If it closes above 87.5, that's very important. So, okay, let me just do these. Frank had asked me 3 days ago if I would do these, and he's really got a nice bunch of stocks. I wanted to look at them. Well, actually, this together with other people. Here we go. HCKT, never ever looked at it before. I don't know where I typed that. HCKT, Hackett. This is Hackett Group, made a peak F in the monthly. HCKT trading at 1542, up 50 cents. Leg E, I'm calling it right now in the daily. Leg C in the weekly. Fabulous looking chart. I'm actually going to ask. Frank. Frank, email me. I want to know what you're looking at. I have something very similar that gives me a scan, and it's just fantastic. Except it's always a little late. I don't want to get into this in leg E, but I would have loved to have looked at it maybe down here as it was about to break out on the 17th. So I want to know how you're picking these stocks. But number one, if you are long, hold your long. It's looking really good. It's at 1542. Really, 1460 is the level that I'd say, okay, just be a little careful. But a break underneath 14, $1.50 in the next week and a half says it's done for now. It needs more time. If it's able to hold the gains, and by today's Thursday, by Tuesday at 2 o'clock to Wednesday 10 o'clock, If it is not taken out 1480 to 1460, but it's holding up here, that's really good. Now, let's say you haven't got into it. Then I'm going to say to you, have patience. Put in a bid at 1460 to 1453, the small position, and then you have to just wait to see how it holds the 14s. So I hope that helps you on that one. AXGN was another question. AXGN, I don't know what Hackett does. I don't know what AXGN does. It looks kind of biotech-ish. Exogen trading at $5.40, up 3 cents. Once again, nice thing. Now, I'm going to say to you, this is a little different. I like the action here. It's at 540. If you don't have it, you've had the pullback since you sent me the email. I would nibble at this right here at 540, but I really would not get a big position for two reasons. Well, first of all, let me look at the volume. Wow, it's a very low volume stock. So I'm just going to say you could take a little position at $5.40 and do nothing with it until it gets to 550. If it gets to 550 and the weekly chart looks like the MACD is crossing positive, I'm going to say you might want to add a little bit more because the next move could be a big spike above 561, and then you have a trading stop on your core position you hold and the trading stop on the new position. As it stands right now, I don't know if I want to even hold it if it breaks under the low of the day of 527. To me, that's too big a percentage loss. I would say if I nibbled here at 540, I'm giving it 535 to 530 as support. And if it takes it out, I'm going to say, okay, I'm watching you real carefully. I don't want to be stuck with this. Why? Because it's made a potential E rather than a C, and then it could start a consolidation. That was that. And the next one is Isle. It's the Isle of Capri. I don't know how to count the monthly. I've got it as a C with a big failure, but so far it's held the 200-period moving average, ISLE. Trading at 1408, it's up 17 cents. This one says to me, I would like it if you're in it. It looks like it wants to hit the moving average, the 200 period at 14.40. So hold it. It's acting very well. I'd be a little careful if by Tuesday of next week it's starting to fail and it takes out 1364. My recommendation is if you don't have it, just have patience. Wait for it to settle in the 1350 to 1320 area. And then give me an email, and let's see if that's the time to buy it. Okay? But it is acting well. If you're holding it, I'd be raising my stop on some because the way the weekly is, I don't know if the weekly is going to hold. That's all. Next one was TDS. I don't know if I got to TDS. Yes, I did. To TDS, nice action. Once again, it's leg C. It made an instant restart. I like it if you're holding it. It's TDS is trading at 30.23, up 29 cents. Leg C, weekly leg B. It looks like it wants to tackle the high of 30.76. Just a little bit to go. When it gets there, then you got to wait for. If it gets to leg D, it says be careful. It could be pulling back some to digest the gains, and you might want to take a little bit off if you're already in it. If you don't have it, I really do think you have no choice now but to wait. It has to get to D, then wait for the pullback in about 8 to 10 days' time. Give me an email. I wouldn't be surprised if it's trading at 28.73 to 28.16, or maybe even a little lower. That's Isle of Capri. Ford. I wanted to do this one. Why? Because, we got a caller. We're going to come to the caller right now. Ford, I hope I have time for it. Why aren't they doing better? Mercury just got a fabulous write-up in Consumer Report. Finally, they're getting things right. I'll talk about that when we get back. Let's go to Mark in Denver. Mark, how are you? Hi, Mark, you there? Yes, I can.
Yeah, can you hear me? Okay.
Yes.
Hey, I know we had Athena on your Traders Corner short list for a while, and I've been watching it. I'm looking to potentially go short it when it looks like it's going to test that left side high of 140.94, and it's quite creeping up there on really light volume. What do you think about that?
Yes, I actually, if I remember, did I take it off the list today? I decided I just don't want to even look at it in my newsletter. I'm going to take a couple of stocks off because for tomorrow, and I want to look at them completely fresh over the weekend. Why? Because the ones that I've mentioned that are these high-priced ones, the ones in the 130s, 260s, etc., I think we are really close to some kind of a pullback. But I don't know whether it's just a pullback that is a buying opportunity or whether it is a pullback that you can have the short position because it's more than 12 to 14% on the downside. I don't want to mess around. I want to really make a decision about it based on the technicals. I want to see how the monthly chart finishes. I want to see how the first day of the month tomorrow, maybe even Monday starts. And then I want to get in position. And my thinking here is that with Athena, you see, Bush, it was mentioned again, I always forget what his first name, Jonathan, I think it is. Yes, Jonathan Bush. He has a way of talking. I mean, he's unbelievable. I have it in for him from maybe 8 or 10 years ago when I had it on my list, and we took about a 1.5 point loss, and we took that loss in the morning, early in the morning, and by midday it was down 20 or 30 points, and he had misled the company. So I'm going to be back with that. Can you hold on, Mark?
Yeah.
Okay, we'll talk about it because I think you're right, but I want to do due diligence. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're back. So this is what I want you to do here. I've got the Athena chart up. I've got the left side, right side price time match, which is the alternate count. I'm going to remove this. I wanted to clean it up as much as possible. As I recall, I think we took I can't remember now with this Athena trade. That's okay. Let me get rid of this one as well. Just wanted to clean it up and do something right here and get out of the way. Just have a chart that's fairly clean, and then I'll tell you what I'm looking at. The cup formation that's forming now, if it was at highs, would say to me, okay, now you've got to be careful because there's a potential for a double top formation. You know, the Chapman drop bucket pattern. but it isn't. And it's broken twice now. It's broken the trend line resistance. It is touching the 200-period moving average. So I'm feeling quite strongly now. First of all, Athena Healthcare is in the in a very favorable area and has been for a long time, and that is data. This is electronic medical records. Believe me, I know all about it. My wife works, I don't know, besides the usual number of hours a day, every night, 4 or 5 hours more, and weekends, full weekends, just putting in the data into the computer on all this medical stuff. It's impossible. It just goes on forever. So I think they're in the right area. I just think they're going to come under pressure. There's a lot of complaints. There's a lot of junk data that's going in, and I think it has to all be sorted out. That's my thinking. Chart-wise, I think you're right. Let's see how it tests 140 to 141. If it goes higher than that, it's saying, you know what, the rectangle formation that's formed in the monthly says it could go even a little higher. And then at some point, I think, whoosh, it comes down into the 112 to 110 area for retest of that 97.30 low. Yeah, the 97.30 low of 2014. So at this point, I'm just going to say, I'm prepared to hold off. I don't have to be antsy-pantsy just about any. There are so many other stocks that are looking like they're starting to become vulnerable. Even Boeing right now looks like it's getting a little bit vulnerable. So let's see how the month closes out. But you're right, bringing it up, it is important at this particular point to more look at the resolving the upside and see how it can handle the potential double top at 140 to 141. Good thinking, good patience, Mark. We'll do this together. So, okay, thank you. So now what I'm going to do is this. I want you to, so we did that. Now, I just want to briefly talk, we've only got a moment. I just want to say, what's with Ford? What's with GM? Ford is acting, it's had a pretty decent, if you go from $11 to 13.40, percentage-wise, that's nice. But that's nothing compared to where it should be. Everywhere you go, you're seeing Fords, you're seeing the Mercurys, you're seeing the Buicks and the General Motors. Fabulous write-ups, getting some of the best reviews for not so much performance, but for reliability. That's been really important in my book. And as I say, I've said it before, the Chevy, they're producing for that range. I just think they're a little overpriced by $1,000 or $2,000. They should cut that price down. They will more, this is my opinion, they'll more than add 30 to 40% in sales if they make a big thing about giving back or whatever it is to be able to move those cars. And those Chevys are looking real nice. So, okay, General Motors is just not doing anything. Something's wrong with this picture. Best sales in decades. Some of it the best sales ever, up to 17 million cars. And General Motors is stalling. Ford is stalling. FCAU, Fiat, Chrysler, they're selling Jeeps all over the show. And look at that chart. Oh, my God, this is just terrible. So all I can say is, as far as the American auto companies are concerned, I don't understand it. Something's wrong with that picture. So we've done that, and that was it. And there's one more that Frank asked about. I'll get to that maybe tomorrow. I've done a lot there. And then Adam talked about Boeing. Yep, Adam, Boeing has made a peak F top. It's under the 200-period moving average. It's a single A up A in the weekly chart. I'm watching this real closely. I think Boeing is going to fail. We'll do a little more work on this tomorrow. And as I say, I think that this is the last day of buying, maybe a little bit tomorrow, and then we've got to be somewhat careful. I don't know if we're going to go all that much higher just yet. Then I think we're going to be pulling back, and that's going to, where we go and what we do after that, that's the surprise. I'll be back tomorrow. Have a wonderful day, and don't forget...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.